Welcome back to InvestED. Today, I want to talk to you about exchange-traded funds, more commonly known as ETFs. ETFs have become a very popular investment vehicle over the past 10 years. In Canada alone, there are over 1,600 ETFs available with over $750 billion in assets. Now, you could think of an ETF as a basket that holds a bunch of different investments that can be bought or sold on the stock exchange. Instead of trading each investment individually, you could just trade the ETF itself. Now, as I mentioned, these ETFs hold a collection of securities like domestic and international stocks, bonds, commodities, and yes, now even cryptocurrencies. And when you buy one unit of an ETF, you're buying a small piece of everything that's inside that basket. When it comes to how they're managed, ETFs can be managed either passively, actively, or a blend of the two. A passive index ETF's goal is to replicate the performance of a specific index that it's chosen to track. This index could provide broad market exposure, something like the S&P 500 or the S&P TSX Composite. Or it could choose to track a specific sector, industry, or geography. But it's important to remember that index ETFs aim to match the index performance rather than beat it. On the other hand, actively managed ETFs are those where a portfolio manager makes the investment decisions to achieve a specific objective. Oftentimes, these portfolio managers are specialized in specific investment areas and manage the portfolio in a way to outperform an index rather than track it. Now, there are many reasons why investors would choose ETFs. They offer better diversification than just owning one stock or one bond. They're transparent, which means that they disclose all their holdings so investors know exactly what's inside of the fund. They're liquid, so just like stocks, they can be bought or sold quickly anytime the stock market is open. And their price adjusts throughout the day, just like a stock. They're primarily low cost, so that means you can keep more of what you earn. And finally, there are so many different types of ETFs out there, including ones like I mentioned that invest in specific asset classes, industries, sectors, countries, or niche markets, that you're sure to be able to find one that can meet your needs. And remember, it's important for investors to consider both the benefits and the risks of ETF investing and ensure that it's suited to meet your specific investment goals. With all that being said, thanks for listening and happy investing.